Looking at the current price action on AUD US dollar, you can basically see that on the intraday levels, price has been going to the downside. After mitigating this inefficiency resting right here on the daily time frame, you can see that very clearly. After that mitigation, so you can see price has been coming to the downside. I was previously anticipating to see whether there's going to be a sort of rejection from this key level, and so far you can see price didn't really give me any opportunity to buy it, so I pretty much just had to be on the sideline. So this is one of the reasons why it's very essential to wait for confirmation before you take a trade. No analysis is 100%. You can't say price is definitely going to do this or do that from any particular position. This is why we always use good risk management parameters. And in this case, as you can see, this was my key level, my last down close candles, and I wanted to see price mitigate this position. And if I was to see a potential 30 minutes shift of market structure to the upside, I would have looked for a buy from here. But as you can see so far, price came down there and there wasn't any sort of shift of market structure to the upside. It literally has been in a downtrend, creating lower highs and lower low, lower highs, lower low, lower high, lower low, and then lower high, and eventually just being in a choppy state going to the downside. So potentially I'm anticipating for a run on sell side liquidity, because if you look at this right here is low resistance liquidity as well. So I'm not going to be surprised to see price run this low resistance liquidity and then potentially drop down into this inefficiency. You can see how beautiful this inefficiency is, just resting right there waiting for price. I anticipated for price to come down in here months back. That was literally in May, but it didn't. It came very close and then continued higher. And look what's resting right there. So let's go to daily time frame. So if we use our Fibonacci from this overall low to the overall high, you can basically see that this key level right here is equilibrium. Anything below it is discount, and this right here, that 4-hour inefficiency, is resting at an overall discount zone. You can see that very clearly. So it's resting at discount. So what do I do now? The only thing I can do is to be patient, stay patient, and wait for price to come in here. Now, once price is in here, it doesn't mean I'm just going to jump in and look for a buy setup. I'm still going to do what? I'm going to wait for a 15-minute shift to market structure. If I see a 15-minute shift to market structure to the upside, I'll look for a buy right here, and I'll target price to run this buy side liquidity and potentially continue higher. But if I don't see any sort of reaction, any sort of break of structure on the 15-minute time frame from here, I'll just be on the sidelines, because it just means that potentially price wants to continue lower and even run this sell side liquidity, which I really wouldn't want to see that happen. But at the same time, it doesn't really matter what I want to see happen. What matters is the fact that price wants to go to the downside. And also look at reverse right here. This is extreme premium, and we went straight into the extreme premium. And you can also see how price closed above that extreme premium, and I don't like to sell when price closes this way at an extreme premium or closes this way at an extreme discount, because it's just giving me telltale sign that potentially, even if we reverse and go to the downside, there's a high chance price will still come up to rally above those highs, because it's just showing me that this key level right here is not really significant enough to send us to the downside. But like I said, it's not a guarantee that price will reverse from here. Price can still come here and not do anything and continue lower. The only thing I'm watching is a reaction from here. If I see a reaction from here, I'll look for a buy and then continue higher, because overall, I usually like to go from the 12-month time frame perspective to make any trading decisions, and from the 12-month time frame perspective, a high, a low, a break of structure, a retest, mitigation, run on liquidity, extreme discount, after that expansion. So I wouldn't be surprised to potentially see price see some level of reaction from there and then continue to the upside, because overall I'm still very much bullish. I'm still very, very much bullish. And if you look at the weekly time frame, you can also see there's an inefficiency resting right here. There's an inefficiency resting right there. So let me remove everything from my charts. You can see the inefficiency here. So don't be surprised if price comes there to run this low resistance liquidity. And after running the liquidity, anything can still happen. Price can still run that liquidity and still continue to the upside. I won't be surprised to see that happen, because eventually this entire zone is low resistance liquidities. So that is my analysis. That is what I'm watching so far, and potentially if I do see this trade play out, I'm going to enter it on my own account. So that is my analysis. If you do have any questions, feel free to drop in the chat. And if you do want personal support, where we do one-on-one coaching program, you can reach out to any of our team, and we will get you started. So I'll see you in the next video.